Welcome to Barchart, series of educational webinars. Today's session, we'll be looking at the captivating world of Heikin Ashi Candlesticks. If you're a trader or investor seeking to elevate your technical analysis game, then you're in the right place. Heikin Ashi Candlesticks are a unique charting technique that can provide a valuable insight to market trends, price momentum, and potential reversal patterns. Now, in this webinar, we'll start by covering the fundamentals of Heikin Ashi candlesticks, including how they are calculated, what they represent, and how they differ from traditional Japanese candlesticks. And you'll gain a solid understanding of the construction and interpretation of Heikin Ashi candlesticks, setting the stage for some more advanced analysis techniques. Hello, everyone. My name is John Rowland, Barchart Senior Market Strategist, and I want to show you how Heikin Ashi candlesticks are renowned for their ability to highlight market trends with clarity. And I'm going to dive right into the candlesticks and help you identify bullish and bearish and ranging markets and how to spot potential trend reversals. You also learn how to leverage Heikin Ashi to gain an insight to the overall direction of the market, which can be a game changer for those in your trading strategies. Now, whether you're a beginner or an expert trader, get ready to unlock the secrets of Heikin Ashi candlesticks and take your technical analysis to the next level. Now, before we explore the intricacies of Heikin Ashi candlesticks and reveal some powerful techniques and practical tips, please welcome my partner and our moderator, Barchart's project director, Jean Baker. Hello, Jean.
Good afternoon, John. How are you?
I'm doing fine, and how are you doing?
I'm good. I'm actually glad that you're doing this session today, because saying Heikin Ashi multiple times, that would really, I think, be a tongue twister for me. So.
I gotta admit, I did do the old practice a few times. So
Heikin Ashi, Heikin Ashi, Heikin Ashi.
Yeah. Very good, very good. Yeah, don't jinx me, Jean. I think maybe
Okay.
you might have.
Okay. No jinxing. Ready to get going?
Let's get it going.
Okay.
So just a reminder, today's session is for educational purposes only, and in decisions to buy, sell, hold, or trade the securities, commodities, or any other investment involve risk and are best made at the advice of qualified financial professionals. And under no circumstances shall we be liable for any losses or damages you or anyone incurs as a result of any trading or investment activity that you or anyone engages in based on information or material you receive through barchart.com and our services. Okay. So Heikin Ashi, right? The term translatingly means average bar. Now we'll see in the formula section that a Heikin Ashi is really a modified Japanese candlestick, which uses an average range to calculate points of the Heikin Ashi candle. Now, what makes a Heikin Ashi so intriguing is their ability to visualize a very simple trends, consolidations, and reversal. Now, another aspect where traditional Japanese candlesticks are very subjective and in their interpretation, and there's hundreds of different types of Japanese candlestick and formations, Heikin Ashi identifies just 3 types of candlesticks. And this is attractive to traders who are more analytical and prefer a more precise rule-based approach. Now, the unique formula eliminates gaps. And again, another benefit of this visualization or this appealing eye look to our candlesticks, this smoothing of price action. Now, in addition, because of the averaging component, it also slows down the market, allowing traders to stay longer in trades. Now, what are these formulas? Well, they're all based on different components, and some of them are based on previous candlestick data, the information from the previous Heikin Ashi candle. The close, or the Heikin Ashi close, is the average of the period's high, low, open, and close prices. The Heikin Ashi opening is the midpoint of the previous period Heikin Ashi candle's body. The midpoint, that's going to be important. We'll look at that a little bit later. The high is the maximum price, the difference between either the period high or the Heikin Ashi opening, whichever one is greater. And the Heikin Ashi low is the minimum price between the the period low or the Heikin Ashi opening. Now, the Heikin Ashi opening becomes the most influential data point. That's because a candle that closes above the midpoint of the prior candles is designated as an up candle, and those that close below the midpoint of the previous candle are designated as a down candle. So here's a chart at General Electric, and I just want to kind of show you this we'll come back to this in a second. But this is what we're talking about. Notice here we have what looks like a very clear uptrend. And notice that all of these candles, then the opening price is reflective of the range, the midpoint range of the body of the previous candle. And you can see how that the candle opens in the middle of the previous candle. And that is going to be important for us in terms of identifying what is an up candle or a down candle. Now, there are only 3 types of candles that we really need to understand, although there might be variations of size in their bodies, in their shadows. There's just 3 basic candles that we're going to pay attention to. An up candle, which is represented here by the green one, a down candle, which is represented by the red candle, and then we're going to look at something called a doji-like candles. Now, these are small body candles that have both upper and lower wicks. Now, where the color is not as significant, but though it could be telling of the price action to come, and we'll get in a little bit more into detail about that. So just really 3 candlestick patterns. If you think about that and compared to Japanese candlesticks, where there's hundreds of different types of candles, this makes it very easy for us as traders. So let's do this. We're going to talk about 5 simple rules that we can use. Well, I'm going to do this. I want to make this visual, since Heikin Ashi is visual. And then we'll revisit these rules. All right, so again, here I'm back at General Electric. So the first rule is a sequence of one-color candles identifies a trend. So if we look here in the green box, we can notice that this identifies a uptrend. And in the red box, that would identify a downtrend. Now, rule number 2, as the trend gets stronger, as the bodies of the candles get bigger or longer. Now, uptrends have upper shadows and little or no lower shadows. And downtrends have lower shadows and little or no upper shadows. Notice here in this uptrend, we have no lower shadows and we have upper shadows. On this downtrend, we have no upper shadows and we do have some lower shadows. So rule number 3, the trend becomes weaker with smaller bodies or when upper and lower shadows start to appear. And you can see a really good example of this. Here we see some larger body candles, and then what happens? Or our body candles start to get smaller, and we start to see the appearance of some upper shadows or upper wicks. This would be an indication that this trend is starting to weaken. And then rule number 4, consolidations occur when there's a series of small bodies candles that have both upper and lower shadows. We're going to call these doji-like candlesticks. And let's see if I got a good example here. Here you can see we've got this kind of sideways action. And notice that all these little candles here, these small body candles, have both upper and lower shadows. This is a period of consolidation. Now, consolidation could be defined as trendlessness or indecision. I kind of think about it as in terms of a market has reached some type of equilibrium between buyers and sellers, and it's waiting for the next price action, waiting for some type of catalyst that is going to move the market. And rule number 5 will be that a trend reversal is probable with the appearance of a small body candle with a long upper and lower shadow. Again, a doji-like candle, or one that has, or we see a quick change in the color of our candles. Now, we're going to definitely look at a lot of doji examples, but here would be a good one. Here's a doji candle, and that would be an indication of there's a potential trend reversal. Here, what we see is an example of a sudden change in color. Notice that this does not look like a doji-like candle, and this could be a potential reversal. Now, we're going to look at some very basic rules that allow us to define when a reversal is confirmed. But at the point here, I just want to show you is that a reversal could be one of those two different scenarios. So let's go back to these rules. Again, the sequencing. It takes 2 candles or 2 periods, to determine a candle. Think about this. The new candle that's being created is based on the bodies, right? The opening price based on the body of the previous candle. So it takes 2 candles to define the color of a candle. Hence, Heikin Ashi Candlesticks signals are delayed by 1 period or by 1 candle. 2, the strong trends have these long body candles, and many of these strong trends have no lower shadows for uptrends and no upper shadows for downtrends. Now, as the bodies become smaller, or the appearance of wicks and shadows, this is a change in momentum or sentiment in our trend, and therefore a possible trend change. Now let's go back to this idea of these bodies and the candlesticks themselves. So if we combine this concept of the stronger trends of these bigger bodies and the concept of weaker trends, our smaller bodies, if we combine those two rules together, then it gives us three elements that every trader thinks about, and that is sentiment, trend, and momentum. And this is addressed by Heikin Ashi. So those color and body lengths are reliable measures for determining the weight of bullishness or bearishness of a trend. Now, long body candles with no shadows represent the strongest of trends or the strongest of bullish or buying or selling momentum. Long shadows or long wicks emphasizes that buyers or sellers are maybe changing their conviction. Again, a way to identify sentiment of our market price movement. All right, so we've got a basic understanding of how a candle is created. We have the formulas and the basic interpretation. So now that we have that, let's look at some real world examples and see if we could look at some trading opportunities that Heikin Ashi identifies. All right, so let's go back. I'm getting GE here. And here on the red box, let's start with this one. And where we have a downtrend. Let's do this. Let's make this a little bit bigger so we can
Hey,
see
John,
this.
I'm going to
Yes.
interrupt you for a moment because I've got a number of people asking, how do you change your chart to show Heikin Ashi?
Ah, very good, Gene. I forgot to do that. You're very good. Yeah, so up here in the upper left-hand corner, you'll see a little notation. It looks like little candlesticks. If you pull the draw down here, you have a way to change your charts to many different types of uh, chart formations, high, low, open, close bars, color bars, your regular standard Japanese candlesticks. And there you can see is the Heikin Ashi setting that'll give you the Heikin Ashi candles. So I apologize for that one. All right, so on this red box here, what do we see? Well, what we notice is here's our downtrend, all right, a strong downtrend with good momentum, no upper shadows, right, and the bodies are getting increasingly longer, a sign of strong momentum and trend. But at the end of this trend, what do we start to see? Just see smaller bodies and starting to see in the formation of upper wicks. Now notice there's that doji that we had talked about before. Again, let me make this a little bit bigger, which could be a potential reversal of our trend. So at this point, the doji here is now indicating to us that there is this indecision or that buyers and sellers have come to a little bit of a battle and the sentiment might be changing. So we know that from this point on, whatever candles are developed could be the direction of the next trend. But our rules here are going to be very simple. We're going to look at the previous candles. Remember, Heikin Ashi candles, our signals are delayed because they are based on the previous candles. What I want to do is I want to go back one or two candles. Maybe sometimes I might have to go back three candles, but one or two candles, and I want to see which candle is in control of the last price movement. Now, what does that mean? Well, here we see that we're in this downtrend. So if we look back from the doji candle, which candle is representing that trend? Well, that would be this candle here because this is the most recent high point, and here's the most recent low. Notice how this candle's high and low are inside of this candle. So this candle is in control. The doji is telling us that there's a potential change in trend or maybe a continuation in trend after the market has paused. but we wait for a confirmation until our next candle gets above, closes in this case, from our controlling candle. So here's our controlling candle, our indecision telling us that there's something about to happen. And then there is our up candle, how we defined it, right? A no wick bottom and a not large body. And this candle closed above the candle that was in control. So now the market has changed its control from a downtrend to a potential uptrend. Now, we didn't really get a big price movement out of this candle or this candle collection, but notice that on this little bit of a retracement here, we never went below this new controlling candle. And again, we would still be in this potential trend. Now let's look at it in this example here. Again, not a deep trend, but certainly 2 or 3 large candles. And in this case, there is our doji-like candle, not a typical doji, right? Small body, larger shadows. And what we're going to say here is now is, again, which candle was in control? Well, in this case, it would be this candle here, still in control of this downward price action. And then the doji is telling us that there's something is about to happen. And so what we want to see is when price changes control from one candle to another. And in this case, since this candle represents the most recent high and most recent low, then this candle here takes over control. In other words, confirms to us that we have a new price action or a new uptrend. Now let's go further. Here, we do not see a doji, right? This is that sudden change in color, a quick change in control, right? This red candle takes over price action as it closed above the last 2 candles. So it is signaling to us that there could be a change in trend. But what happens then? Well, then we get these wicky kind of doji-like candles, and then eventually we get an up candle right there that closes above the candle that was in control, that was showing us a potential new downtrend, and that downtrend has failed, and now we have a set of new uptrend. So looking at the previous 2 or 3 candles to see who's in control, looking at those high and low values, and then waiting for that confirmation based on our new Heikin Ashi candle symbol. Now, here is a unique, but not distinctively unique Heikin Ashi signal. Here we see an uptrend. We've had this uptrend for quite a period of time, but in this little last price movement, we have a series of larger body candles with no wicks on the bottom. That's a sign of a strong trend. But what has happened in the last few days? Our bodies are getting smaller. Our momentum is falling. We're seeing a little bit of a change in sentiment, and our trend is weakening. And now we get a doji, right? A very clear doji-like candle. Now, in this case, the control has now been given to the doji because it represents what? The highest price over the last couple candles and the lowest price over the last couple candles. So now we have a red candle, which could indicate to us that a new price action is about to go lower. But who's in control? The doji is in control. And then not until we get another candle that closes below, or if this candle before the end of the day closes below this doji low, can we confirm that we're going to see a new price movement. Now, this is important. This is why Heikin Ashi candles are valuable for traders. If I was in this trend, even though I'm getting this red candle, I really haven't gotten that confirmation that my trend has changed, although it certainly looks like that because we're seeing a doji after an extended move, and now we're seeing this big red candle. I mean, the odds are, the probability is that we are going to see a reversal in price action. But the fact is that we're still seeing the doji is in control, and that as long as price stays above the low of this doji, then we could still theoretically still be in this trend from the long for a longer time. In other words, stay with this uptrend. Now, if I was looking to take a short, I can't really take a short until price breaks below that doji. Now let's change our candlesticks from our Heikin Ashi to our Japanese candlesticks. And what I want to show you here is, notice here, this is that interpretation, right? Here we can see for our Japanese candlesticks, we have a big engulfing candle, and that would be a sign of price reversal. And now we have that confirmation, this second candle below. So if you were using Japanese candlestick theory, you would have exited this trade, or if you were looking to take a short, that would have given you permission. But the Heikin Ashi has not given us that permission, has not given us that confirmation. So many times what we'll see is, because the way Heikin Ashis are developed based on previous candles, there's this delay action. Now, the delay action sometimes can be beneficial to us. In this case, we might still be in this uptrend, but it also might put us at a little bit more dollar or cost price risk, because by the time we get the confirmation, let's say to exit a trade in this case, the price of the stock, in this case GE, might be significantly lower than it is currently right now. Again, who's in control? The doji's in control. We have yet to get that confirmation. Again, this could still be in this trade from the long side. All right, let me go to Apple. And this is a 6-month daily chart. And you can see a nice V bottom, a nice change in direction from a downtrend to an uptrend. And this is, again, what makes Heikin Ashi a very desirable charting, is because of this visualization. Very easy for us to see a change in trend. And now, again, let's look at this, what is going on, right? A large momentum trend, not many upper wicks. And then what happens? Our bodies start to get a little bit smaller, and we're starting to see the appearance of upper wicks in terms of this downtrend. That's telling us there's a little bit of a battle by bulls are trying to hold the market up. There's a change in sentiment, that there could be something about to happen. Now notice on this candle right here, right? This is a doji-like candle, right? We have more wick, more shadow than we do body. So this is telling us that an indecision is about to come into this market. And if we look at this trend, well, who's in control? Well, this doji type candle is certainly in control as we move forward the next 3 candles, because it represents the most recent high and recent low. So in order for this trend to continue, what we would like to see is another red candle close below this controlling candle's low. If we see a reversal, as we do here, again, here's another doji type candle, green doji, right? That's signaling to us that there could be a price change to the upside. Well, we still can't confirm that until what? We get our up candle, a very distinctive up candle, and that up candle that closed above the last controlling candle, in this case, this doji. That would give us permission to identify this new uptrend. Now, again, in this case, the visualization is very easy. The rules are very easy for us, right? It's very rule-based for us. There's not much interpretation here for us. But if we change, again, if we change this candles back to a Japanese type candle, notice that it gets a lot more messy. And let me go back here for a second. I just want to show you the time so you know that where we're at. So here's our doji-like candle that told us that there's a potential change or that the control has gone to this one candle. And that happened on January 3rd. And then our confirmation came on, you can see, on January 9th. So I'm going to change this back to our Japanese candles. And there's the third, right? So let's think about this in terms of Japanese candles. So what do we got? This big red candle that kind of engulfs all of this. If you were looking at this and you were interpreting this based on Japanese candles, that would probably give you a good sign that the trend is still in control and that this market is going to go lower. Engulfing candle that making a new low after opening up higher, that would be a very bearish signal. And look on the day of January 9th, where we got the buy signal on the Heikin Ashi. Well, what do we see here for us? Well, this is an inverted hammer, right? Not really a bullish sign, right? This is actually telling us that there's selling pressure that has come back into this market. So using Japanese candlestick interpretations, right, you'd still be short and you probably wouldn't even have stopped yourself out on this candle, right? Whereas the Heikin Ashi, there you go, Gene. I'm tripped up one time. The Heikin Ashi candle gave us that confirmation that we can go long and catch this new trend. All right, let's look at another market. So here's gold. And let me go to 6 months first. So this is 6-month daily. And on this one, what I wanted to show you is a couple of those changes in control in terms of how we define or give ourselves that rule-based signal to allow us to take a long or a short. So again, look at here, we see a little bit of a small downtrend, right? We see some down candles, no upper wicks. Then we started to see a series of candles that have both upper and lower shadows, right? Doji-like. And, market is not really going anywhere. So this is kind of a sign of equilibrium or that period of consolidation. Now, in this case, well, what we really do see is we see two candles that have control over this market. That would be this last strong down candle, which represents our most recent high, and this doji-like candle here, which represents the most recent low. So as we come through consolidation, what we need to wait for is the next up or down candle that either closes above this candle or closes below this candle. And there we got it right there. We got that nice big body candle, up candle that closed above that controlling candle. Now we got a lot of consolidation here. If we looked at this, we broke this down candle by candle, you could see that we changed control a few times. But, if we look at this in terms of this doji here, not until we really got to this candle here did we get a real true uptrend confirmation. Again, still you probably suffered for a few days, and again probably not even until we got to this up candle here did we really get a real strong confirmation of an uptrend. Now let's look over here again, a downtrend that finds a sudden change in color, doji, right? And in this case, right, this doji took over control on one candle, right? It represents the high of these last two candles and the low of these last two candles. So what is our trade direction? Well, it's going to depend on the following candles. Which candles or which direction is the market going to go? And in that case, it wasn't this candle, but it was actually this candle that would have given us that confirmation that we got above, excuse me, it would be this candle here, we got above our doji, which would have signaled to us a potential new trend. And again, who was the last candle that was in control was our doji. And notice that we did get a little bit of retracement in price, but yet none of these red candles closed below this doji low. So we would still be in this trade, a nice little rally out of it. So let's go down to a little bit lower time frame, because we can use Heikin Ashi not only in dailies, but we can use them in multiple time frames. And what happens though is as we get into lower time frames, especially those you are day traders or you're using Heikin Ashis in what I would call those micro time frames, let's say 5 minutes, 15, 30 minutes. In this case, I have a 60-minute chart. What you will notice is you'll get a lot more signals. You have to take them a little bit more with a grain of salt. Again, it's very rule-based though. Again, look at here, we have a nice dominant downtrend, right? Very strong down candles, no upper wicks. Then we got the doji, right? That's that indecision. That's telling us something is about to change. And then what's our rule? Well, our rule was as long as the trend is in control, then we should see some more red candles down below the doji. In this case, we didn't get that. What did we get? We got a rule-based buy signal where we got a green candle that closed above the doji, and that would have signaled to us a change in our trend reversal. Now, here's an interesting one that is going on. So every downtrend, and this is what I'm saying about how, especially in futures markets, Heikin Ashi candles, is that you can see these doji-like candles. Now, this is not a small candle in terms of price action, but it's definitely more wick and shadow than it is of body. So in this case, this candle now controls the whole market. And notice that it was multiple candles, right? A lot of price action went on because of this candle has controlled the price action. And so as far as a short in this market, we wouldn't look for a shorting opportunity until we got below this doji. And we wouldn't looking for a buying opportunity until we got above here. And you can see that not until just the other day did we get a buy, excuse me, I guess that was early this morning, did we get a buy signal. But immediately what had happened? We got another doji, another signal of indecision, and now we're starting to see a downtrend. So the control was taken away from this doji by this candle, and then the signal came off of this doji here. So that candle closed below this doji that took away the control of this uptrend that was about to materialize, and now you could be in this trade from the short side. Now, from a longer term perspective, maybe somebody who was looking at gold here might still think about not shorting this one until you got a good trend developed that took out this former candle that was in control. All right, I want to show you one more example. And I do see a couple questions. So let me pause here, Gene, for a second. I want to answer a couple more questions. So I do want to show one more technique that we can use with Heikin Ashi candles.
While John is pausing to review the questions that I've passed through to him, just want to remind everybody that if you do have a Barchart account, doesn't matter if it's a free account or a Barchart Premier account, you can set up templates with Heikin Ashi charts at your different time frames and include other studies if you'd like to as well using our chart templates. So if you do not have a Barchart account, I suggest you even if you create a simple free account, you can be on your way to start to analyze these different chart patterns.
Okay, so Gary asked a question. I think we answered that about if you see a trend reversal or a change in direction, how do you use to enter? And again, just keep in the mind of that, look at the previous candles that were before the potential reversal, which candles control, and then we talked, showed you, I gave you a couple of great examples. So I see three questions here that are kind of related. One is, um, if you are using reversal patterns are confirmed, why do you need to add EMAs? Another is about, is a Heikin Ashi really on the previous Japanese candles and not previous Heikin Ashi candles? No, that is a misnomer. All Heikin Ashi candles are based on previous Heikin Ashi candles, not on previous Japanese candles. And then Norbert asked a question about using MACD. So let's talk about this EMS and MACDs. So yes, we can use other technical analysis with our Heikin Ashi candles. Again, what did I say to you? Heikin Ashi candles are based on previous candle and that there's a delayed signal. So if you're using, let's say, a MACD or an EMA crossover or a change in an EMA direction, you might see those giving you a signal before the Heikin Ashi gives you a signal. So what is nice about the Heikin Ashi is it is a confirming to a previous technical analysis. Now, do you have to use other technical analysis to use Heikin Ashi candles? No. For somebody who is very rule-based, right? A lot of times EMAs and MACDs, there's that interpretation aspect to it. What's nice about Heikin Ashi is there's no interpretation. It's really very, very rule-based, right? It's just, do I see green up candles? Do I see red down candles? Or do I see a lot of dojis with wicks on both sides? And then I'm waiting for those confirmations, those up candles or down candles, to give me that signal. So let's look here. This is the SPY, and here I'm on a 6-month daily candles. So what do we see here? Okay, so again, what do we see? We see an uptrend, and we said that dojis tend to appear at the end of extended trends, and then certainly we see a doji here. Now, if you want to know what this pink box here, Powell hammer, this is something that we've been identifying in our market and close segments on Fridays for our premium members. Now, and if you're not a premium member, I'll show you how you can demo that if you wanted to come in and check that out. So this is just, this pink box represents an area of supply or resistance. So again, here's where we're looking at another technical analysis, a level of supply, an area of resistance that prices come into, and now prices moving out of it. So what we could do is wait for the Heikin Ashi to tell us, okay, yeah, we found supply, we found resistance, and now let's see if we're going to see a new trend. And certainly that's kind of what we saw here. We see this doji candle, right, that was created. Well, which candle is still controlled? Well, what's our previous trend? Well, our previous trend was up, and this candle was in control. So what's our rule? Well, we wouldn't take a short, or we wouldn't believe in a new downtrend until we got a red candle that closed below the candle was in control. Now, did we get that? Yeah, we did. And then we got another doji, but in this case, this red candle did what? It reconfirmed this candle that just took over control of this new trend. And now we're seeing the beginning of a new downtrend in the SPY at the 1-hour time frame. So one of the other really cool things about Heikin Ashi candles is, as a technical analysis, what we can do is we can look at it through a lens of multiple time frames. And this is really where I think Heikin Ashi shines, because what we want to do is we want to use multiple time frames to give us a clearer direction of the overall market. And then if I have a clearer direction of the overall market, then that might give me a bias of what type of trades I want to take, longs or shorts. So up here where it says grid, I'm going to go in the grid, and I'm going to go onto the 4 grids. Now, you don't have to use 4 different time frames. You could use 2 different time frames. I think 4 is a really good way to define this. So I'm just doing it. I just got rid of that moving average. So let's look what we have here. So we have an intraday, 5-day, 30-minute candles. These are all 30-minute candles. And what do we kind of see here? Well, over the last 30 minutes, before I came on, we were starting to show the signs of a potential uptrend. Well, we're certainly in a downtrend here. So we've kind of got a bit of a reversal, but we're barely making the beginnings of a new trend. So I would say, maybe a reversal, maybe the beginning of a new downtrend that is in conjunction with this previous downtrend. Here's a daily chart over a 3-month period. And what do we see here? Well, we see that clear downtrend signal. Here's a weekly chart. And the weekly chart here, well, it's a bit of both, right? It's a little bit uptrend, it's a little bit downtrend. And right now we have a weekly doji. So that's telling us the market is indecision. So what do we want to see? Well, on a weekly basis, if we wanted to see an uptrend, our next week's candle, well, we would want to see either this candle or next week's candle, we want to see it above, right? This controlling candle, that's our last up candle. Or if we wanted to confirm a downtrend, notice that we wanted to see it below this candle. So we have kind of an indecision here, sideways. We have a downtrend here. We have what looks like was an uptrend, but now indecision again. And here's a monthly chart. And a monthly chart here, again, what do we see? Well, a lot of wiki, doji-like candles. In other words, an area of consolidation. So what is the overall direction, or what is the overall picture that the SPY here, the S&P ETF, is telling us? Well, through multiple time frames here, it's telling us the market really has no direction. So as a trader, right, this is really kind of telling me that, maybe it's time for me to just sit on the sidelines until I start to see a defined confirmation or consolidation of all 4 time frames telling me, or 3 out of the 4 time frames telling me the same thing. Now, what I do see is the daily is starting to show signs of a downtrend. The lower time frame is showing signs of a downtrend. So really, I would like to see is one of these other 2 time frames show me a downtrend. Now, that might not happen this week. It might happen next week. Now, if this candle right now, which is doji-esque, turned into a down candle, right? A change in color, sudden change in color, then that would give us a better confirmation that we are in a downtrend. The other thing I wanted you guys to notice too is as I'm going through here, as we talked about, that the previous candles help define our range, and our range of our Heikin Ashi candles are based on that period time frames. Notice that the values of our candles are all different values. If I was looking at a price chart or a Japanese candlestick price chart, if I looked at multiple time frames, they will all be the same price value, right? That's the difference between Japanese candlesticks and Heikin Ashi candlesticks. Okay. So what are some of our takeaways today? Remember, Heikin Ashi is a very simple, non-subjective visual technique to highlight trends, reduce that price noise. Remember that example with Apple, and identify areas of consolidations and potential reversals. Sentiment, trend, and momentum are easily assessed by Heikin Ashi. How do we do that? Well, we look at the color and the body lengths as reliable measures for gauging our market's bullishness or bearishness, right? Are we seeing a continuation of up candles, a continuation, a series of red candles? And our doji-like candlesticks represent indecision. And the following candlesticks will reveal that actionable price momentum or movement. Now, what's the key for us? What's our rule base here? Well, we still need to see that new up candle or that new down candle take control from the previous candle that was in control. How do we define the previous candle was in control? The candle that represents the high and low of the past 2 or 3 candles. And finally, Heikin Ashi is in essence a 2-period moving average. So therefore, again, our signals can be delayed and should be used to confirm other technical analysis. So the 2 questions that were asked in terms of using other technical analysis, here's a way that you can enhance those technical analysis, either moving averages or MACDs, RSIs, again, another great tool that you can use with your Heikin Ashis. All right, Gene, I think that's where I want to end for today's session, unless I'm running through a couple. I'm just checking, make sure I answered all the questions. Okay, so let's do this. So as all of our webinars will end up either on this page here, you can find them through our archive webinars, and the slides that I showed you today will be attached to that webinar. You can see them, they're right here. Next week, we're going to have a special guest. I'm inviting back Jim Van Meerten, who does our chart of the day. And Jim and I are going to look at market of investing, talk about things of what you want to do as an investor, how to get started, and then how you can use a very simple plan to tell you when to exit a market. And this is going to come from, just a basic knowledge, right? We want to make this very digestible, very easy for folks to understand. But even an experienced trader, I think from the knowledge that we're going to get from sharing time with Jim, who does our chart of the day, I think you're going to find it very, very fascinating how simple a very successful trader like Jim is, and some of the rules that he uses. So that's next week's session. And I want to remind all of you that if you're a premier member on Fridays, we have our market on close. We talk about topical subjects, trends that are happening for the week, and we'll look for some potential trading ideas. If you're not a premier member, we offer a free trial period for 30 days. You can come in and check that out, check out some of the tools that we have as well, and also come in and watch our market on close segment. So did I forget anything, Gene?
No, John, I think that's it. Just again, reminder to everybody to sign up for next week's session. I think that's going to be a really, really interesting topic.
Yeah, I'm really looking forward to the sharing the limelight here with Jim. We've been working on this now for about 3 or 4 weeks, and I just just spending just a little bit of time with Jim, it's just made me a better trader. So I'm really excited about having Jim as a guest and really going to take the lead on all of the discussions. So, okay. Well, until next time, everybody be safe out there, stay healthy, and the good of all trading.